Hello, everybody. In this video, we're going to be talking about strategy and future trends, bank strategy, and also maybe a few minutes on what future trends in banking might look like, what banks might be looking like, say, with a 10 to 20 year time horizon. Which brings me to a quick anecdote. I do have a friendly bet outstanding with currently with the CEO of Citibank's Jordan subsidiary, a lady who I met at a conference just this year. We've got a bet. She thinks that branches will be completely out of existence, as dead as the dodo, so to speak, bank branches, physical branches for customers going to within 10 years. I think that's not going to happen. I think in countries around the world, one will still have branches, certainly not as many as we see today, but there will still be a few, maybe more than a few, even 20 years from now. Okay, but that's a separate topic. Maybe that's a topic for another video. Is there a future in bank branches, branch banking? Right, but I want to talk about strategy first, okay, and future trends in banking, minus the talk about branches. So one of the topics I cover in Principles of Banking is the strategic planning process. It's actually chapter 15 of the book, and I'm going to just run through 2-3 minutes worth of the key considerations in setting bank strategy. We kick off by first of all, we accept that strategy as a topic, or setting strategy, is a much researched and much published area in not just in finance but in every industry. There are countless numbers of texts and videos and documents, etc., and policies on setting strategy, on strategic planning. So this is my simple, 5-minute humble addition to that. If you wanted a bit more detail, as I mentioned, chapter 15 in the book. What is strategy for a bank? Well, it's very similar to what strategy would be for any corporate entity that has a long-term vision. With a bank, as opposed to some other types of entity, it's actually very, very important to have a long-term view, because banks, in essence, are here in perpetuity. I've yet to come across any bank that had a mission statement to wind itself up in 10 or 20 years. As far as a bank is concerned, they are here in perpetuity, forever, to carry on doing what they do. So we, as bank managers, are but temporary guardians of the bank, the temporary stewards of the bank's balance sheet while we conduct our banking activity with our customers, but we pass that on to the next set of bank managers who come after us, and they would do the same. We banks should have a long run strategic objective, because if there's one type of firm that does need to stay in business as long as humans are conducting commerce with each other, it's a bank. So every bank should have a long run strategic view, a long term view in mind. So what are the steps in that process? So I would say it's 4 steps, four-step process. First of all, where are we today? Okay, so what's our current state? So often that's described as current reality. Where are we today? Step 2, and so we should take stock of that. Step 2, what should we be aiming to be? Where do we want to be in 5, 10, 15, 20 years? What do we want to become? Now, if the answer to that is stay exactly as we are and just carry on doing the business we do, making sure we run positive profit and loss at the end of each year, then that's perfectly fine. That's a strategy. We carry on as we are. It's often a risky strategy because banks don't exist in a static or a vacuum environment. First of all, there are other banks, one's competitors. And secondly, the economy and commerce and society generally are also dynamic. They are moving, they are growing, they are changing, their tastes, their wants, their desires, their customer service provision requirements, they're constantly changing. Maybe not significantly from one year to the next, but there is change. So banks have to be part of that change process in society. So a strategic plan that recognized where we are now and identified where we are now, but also said we want to be here in 5, 10, or 20 years' time, is worthwhile. So it should recognize that we act in a competitive environment, that our customers' requirements may well be changing, and we want to meet those requirements whilst also competing with our peers, against our peers, okay? Because the customers always have a choice. I'm not familiar with any country where there's only one bank in that country. Customers always have if you are, please let me know which country that is. If customers always have a choice, retail customers, individuals, corporate customers, the government, sovereign authorities, they can always go to another bank if they don't want to do business with you. So step 2, what should we aim to become? And why do we want to become this? In other words, our vision, our preferred future. I don't mean vision in some platitude consultant speak. I mean, what do we actually want to be doing? Do we want to be all things to all people? Do we want to be a full service provider? Do we want to target just this group of customers? Do we want to provide customer service provision or financial products to every type of customer? What is our vision? But genuinely, what is it we want to be doing? Not just some mission statement or some platitude. What do we want to be doing and why? The third step, what do we need to do to take us from the current state to that future state? That's the real challenge. That's very easy for a consultant to come up with platitudes. The challenge is, what do we need to do to make sure we get to where we want to be in that 5, 10, 20-year time horizon? And that's going to have lots of inputs because there's lots of things we need to be addressing. Our product offering, the type of customers we do business with, how fast we want to grow, how fast we can grow. Remember, balance sheets are constrained. Capital, which is required to grow the business because you need capital to support your lending, and funding because you borrow money to lend. You need capital and liquidity of sufficient size to deliver the volume growth, the business growth that you want to do. So what are our constraints? So there's a whole host of issues in that third step, issues involved in that third step. What do we need to do to go from our current state to our future state? The type of customers, the type of products, how much we would like to do, how much we can do, what our constraints are, what are our constraints in making sure we generate profit whilst we're growing the business? What options do we have when we are faced with constraints? All that goes into this third step. And then the fourth step follows on very closely once we've identified step 3 is what enablers are required to ensure that we can actually execute this plan. So I've got a couple of diagrams that show this. In fact, one is the simple state. Often the strategy setting might have been what's our return target? We want to make 15% return on capital. By the way, I just pulled 15% out of the top of my head. It could be 12, it could be 25, or any number in between. We want to return X% return on capital. What do we need to do that? And if that return on capital target is aggressive, it's high, we'll need to extend along our risk reward profile. If it's lower, we can be a bit more conservative, the type of business we do, because as you would have gathered already, I'm sure, business is not risk free unless we're lending money to the government or the central bank. But lending money to the government or the central bank will not return our target rate of return. So we'll need to do other more risky business. In any case, banks are here to lend money to their customers. That's why we're here, to help society and economic growth by lending money and taking in deposits. Maturity transformation, those people who have deposits will deposit those with the bank. The bank will lend those funds on to those people who want to borrow money to grow their business or to buy a house or indeed to do anything with money that one borrows. So banks are here to do customer service, and we want to do the type of business that enables us to get to our rate of return. And if you look at my 2 strategy setting diagrams, we've got a return target. The original approach would have been, okay, what do we need to do that? My next slide, these are very simplified. I should warn you. The next slide, though, has reversed that order around. What returns do we require? But what does our balance sheet need to look like to get to that state? Okay, so I've reversed that around, and that's what I'm showing on those clockwise and counterclockwise diagrams. Strategy setting in a current environment, in the environment that we have today, post 2008, with constraint on capital, much more expensive capital and funding. These are constraints on the balance sheet. How should we structure the balance sheet to do the business we want to do? So strategy setting is of no value if it remains academic and something that the business lines don't directly get involved with. It can deliver value if it identifies an end state that is feasible, desirable, so feasible and realistic and desirable, and delivers what all the stakeholders of the bank want. When it's not in that shape, it becomes an academic process which has very little value, and banks kind of lurch from one year to the other without having a real vision or goal. The reason it's important to have some idea of where we want to be, number of customers, type of products, what countries we want to operate in, etc., etc. The reason that's important is because it's all part of remaining viable in a competitive, dynamic environment. If the strategy setting at a bank is not answering the question, how do we remain viable, meeting all our stakeholders' requirements in the medium to long term, then the whole process is of no value. So We're not going to get the detail in a short video, but that's what the real value out of strategy setting is. The strategy setting process in a bank. The real value is saying, here is what we want to be doing with a 5, 10, 15, 20-year vision target in end state in mind. Here's what we want to be doing to make sure we get there. And of course, if I'm going to quote Mike Tyson now, I'm going to quote Mike Tyson, everyone's got a plan till he gets punched in the mouth. What he means by that is, of course, your plan has to be adaptable because crises come along, stress events take place, customers change their mind, requirements change. We've got to be able to adapt to respond to changes in the market environment. So every good strategy will set out our end state, but will also be adaptable because markets change, because the economic environment changes all the time. So that was strategy setting. I thought I would finish with a few words on where we think could be, given that strategy is a long-term target setting process. Strategy is all about the long term compared to, say, tactics, which is short term. Well, that's a bit of a simplistic definition there. What are future trends in banking? We should differentiate between products, customer interface, the operating model, banking and lifestyle, all these other issues as well. Banking, as I defined it in another video, banking is the art of lending money to customers and taking deposits from customers and managing the resulting balance sheet during the life of the loan and deposit products. And it's not about matching customers; it's about acting on one's own behalf. It's not an agent basis; it's not an agency. It's the bank acting as the service provider to its customers and managing the resulting balance sheet from lending and deposit taking. That's what a bank is. Now, when we look at things like the customer interface, the branch, the telephone, the video banking, mobile app banking, to me, that's the customer interface. The entity that is providing that service is still a bank, provided it's lending money and taking deposits. So future trends in banking often talk about what the future of the bank looks like when we don't have branches or everyone's doing digital or there are no human beings involved and it's all AI generated. At the end of the day, a bank will still be undertaking banking business. The nature of the way it provides it will have differed, will have changed. Certainly, it's changing all the time. But as long as it's lending money and taking deposits, it's still a bank. So future trends might include more additional types of product, new types of customer interface, lifestyle type of banking services provision. There are banks in the world today that you can, as well as getting your banking provision through the mobile app, you can also sign up to your mobile phone network provider. There are banks that provide a travel agency service. There are banks that on the same mobile app you can purchase white goods, refrigerators, washing machines, things like that. That's again a customer interface and banking as a lifestyle provider, but the bank is still a bank. So I suppose what I'm saying is future trends are additional service provision, quicker service provision, maybe quicker cross-border payments, all that sort of thing. But the bank as an entity will still be around. I used to hear a lot about when the large tech companies do banking, banks as we know them will be competed out of existence. I've heard that the last 10, 15 years now, and I've yet to see it happening. And I don't think it will happen, but that's me sticking my neck out, making a future prediction. So future trends will be all around the nature of the delivery of the service and what additional services one can get, for example, via one's banking provider. But the bank itself, as we recognize it, the type of business it does, will still be around. And that's my tuppence on future trends. By the way, notice how I've said all of this without once mentioning decentralized finance or DeFi, which incorporates the digital or the crypto and the stablecoin asset sector as well. DeFi is a whole new ball game about smart contracts, about no human interaction, about trustworthy service provision, unchangeable contracts, unchangeable transactions, the blockchain, all that good stuff. Will that change the nature of banking? Possibly, possibly not. At the moment, there is not a clear blue water, but still a lot of separation between TradFi, traditional finance, and DeFi. I don't see banks not being able to operate in this environment. I'm sure they will be. But I see the banking service provider remaining much as we see it today, lending money and taking deposits. but the nature of what other products they offer and the nature of the customer interaction, that's what's changing is in front of our eyes now, and that's what's going to be continuing to change and may well look something very different. Um, say 10 to 20 years from now. I still think we'll have the odd branch in the odd country as well, though. Okay, thank you for listening. If you enjoy this video, please subscribe. I'll see you later. Thanks. Bye bye.